This is the Daily Market Rundown live from the Tradelo Trading floor. It's October the 31st, and some highlights from today's show. AI spending is in focus again. The BOJ signals December is a live meeting, and Bitcoin is positioned for record highs. Good day traders, welcome. This is the Daily Market Rundown. Let's get stuck straight into it. I think the key overnight theme was perhaps a little bit of disappointment around some of key earnings coming from the likes of Meta. Ultimately, what we are hearing is that there's a little bit of concern that there's some significant expenditure going into the rollout of infrastructure for the future of AI, and no real returns coming down the pipeline anytime soon. Now, this should mimic ultimately what we saw in Google's Q2 earnings, where they came out and said, well, there's significant expenditure and no real earnings coming in the short term. The result was we did have quite a significant correction in global equity indices as a result of that. In other words, the market's kind of been hyping up returns from AI, getting really excited about it. But in reality, at the end of the day, if companies are not going to be sort of seeing any kind of returns or any earnings as a result of that investment, at some point prices are going to seem a little bit frothy. Now, that is some of the key overnight news. I think the other takeaway is, of course, what's happening in yields. We continue to see this ongoing march higher in particularly back-end yields in the United States, and that is driven primarily what we're seeing with inflation expectations in the US. If you look at 1 year inflation expectations, they are pretty much at years highs, and they continue to rise. In other words, there's a little bit of concern starting to creep back into the market that perhaps the 50 basis point cut from the Fed was premature, and that perhaps the Fed may have begun the process of loosening a little bit too soon. Now, we will talk a lot about that as we move into next week's Fed meeting. We'll, of course, cover some of the scenarios for that. But let's now turn our attention to one of the key overnight news, which was all about the BOJ. They have opened the door to a December hike. Now, this shouldn't necessarily be new information. They have been on, let's say, a hiking cycle, albeit very much hike and then pause and wait. Now, the reasoning they gave us for pausing after their initial hike early in the year was that there was concerns of the implications of what their hiking policy might do to markets. Now, if you cast your mind back in the chart and we go back to July, what we saw was not just a significant appreciation in the yen, but we saw concerns around the carry trade. Okay, and this is ultimately what led the BOJ to consider or reconsider hiking too aggressively. Of course, they also stood behind this idea that they did want to see more data coming in line that would suggest there are inflationary pressures. Now, I think the key takeaway from this is not pretty much that the BOJ said anything new. I think the fact that UADA has dropped the message that the BOJ can afford to spend time on risks. Yes, that opens the door to December. Doesn't mean they hike. No, I think it gives them optionality to hike. Now, the key here is that what will make them hike? Well, it's very simple. If you look at the chart, the yen is pretty much back at that intervention level that it was back in July. Okay, the very reason the BOJ felt inclined to get hiking and get on with it was because the yen was being speculatively shorted. Everyone wanted to short the yen because, of course, real rates are very negative in Japan. Now, we do remember, if you go back to early in this year, we had the Japanese financial department intervening in the currency, buying up Japanese yen to try and stem the weakness in the Japanese yen. Now, we're almost back at those levels. We're not that far away from those levels we were before the BOJ intervened. So effectively, what that signals is if we do continue to see that yen weaken, I suspect the BOJ won't have a choice but to hike in December. And I think that's the key takeaway is, should we get anywhere near this sort of 64, 65 area within the yen, it makes absolute sense to start buying up the yen and effectively go with that narrative that the BOJ will be forced into buying or hiking rates in, or alternatively buy their currency. Okay, and it's going to be a hell of a lot cheaper for them to simply hike and again keep the door open to future hikes. Okay, so that's quite an interesting story. And then, of course, like I said, AI earnings was very much sort of the overnight news. It's created a little bit of negative sentiment in the equities. The indices are set to open lower on concern. Now, what I do want to stress is that this concern is not something to be overly concerned about, because there are bigger things at play. But the concern was driven by both Microsoft and Amazon, and they both Microsoft and Google and Meta. They're all saying the same thing, which is we're investing heavily. We don't expect to see any kind of returns on that in the near term. Now, again, I think the market's tied a narrative to this, that this is concerning for AI. I think the reality is, if we take a chart look at Meta, we can see that this news has come at a time when Meta has rallied, over the last, call it 2 months, from $500 to $600. Okay, so call it a 15% rally in a trillion-dollar company. It's pretty much a little bit of profit taking that we're seeing in the overnight session. Okay, Meta is set to open lower. So is, of course, Google and the likes. They're all going to open a little bit lower in the overnight session, and that's simply just because we're seeing some profit taking after quite a significant move higher. Okay, in terms of the technical landscape of Meta, again, you just got to keep buying those dips. We can see that dips are being, particularly very aggressive sellers, are being bought very aggressively, and it does feel like we've just touched perhaps a bit of overbought territory now, and should start to see this market rotate a little bit lower. Okay, that is our Meta news. Now, if we go and take a look at the Bitcoin, I think that's an interesting market. What happens from this point forward, I think, is going to be largely dependent on what the outcome of the election is. We'll talk all about election outcomes on Monday. We do have a live stream all about the 2024 election, what to look out for, trade opportunities, etc., etc. But Bitcoin should hold a bid. It should be hovering around this record high. I expect it'll probably break out of record highs over election night. But what happens after that is going to largely come down to the positioning of the market. Okay, right now, the reality is that Bitcoin is positioned long. Everyone that wants to be long is long. They're long on this idea that Trump will not just secure the House, but also maintain the Congress and keep the Republican majority there. So ultimately, if that is the case, if we do get that scenario of a sweep from the Republicans, I do suspect not only do we escalate above record highs, but we then do accelerate to the upside. However, like I said, the most important thing is everyone is positioned for this. Okay, everyone that wants to be long Bitcoin is long, and they're only going to be adding to longs through the break. Okay, and what that means is you've got buyers in this market, so we do need to be maintaining very important price points. Okay, we drop below that 68,000. You don't want to be long that market anymore, because guess what? Everyone that is long is going to get forced to take profits. Okay, so just factor that in. Technically, there's a lot of longs in this market. Fundamentally, everyone wants to be long into the selection. So we're going to need to see those fundamentals deliver to obviously break above that record highs and begin the process of price discovery. Okay, but constructively, this market looks good to the upside, and we should maintain that but until we get further news. Now, finally, today we do have US PCE data. Again, perhaps secondary data, not as important tomorrow's non-farm payrolls data, but one that will be watched. What we are looking for, of course, is some outliers that will kind of excite the market. In terms of what you can pay attention to, we're expecting a 0.2 on the headline. And you can see with the purple line, that is the 6-month average. And you can see 6-month average is pretty much coming in bang on around 0.17, so call it 0.2. So 0.2 is neither here nor there for the inflation trend. We continue to see this little bit of a disinflationary trend. However, and this is the key takeaway, there is a lot of concern now that inflation is becoming a little bit more embedded. There is a lot of concern that the Fed has kind of taken their eye off inflation. They've begun the process of cutting a little bit too soon. And so what I expect comes not necessarily this month, maybe not this year, but I suspect what happens now over the course of the next couple of months is at some point we're going to get that really big beat on the PC, or that upsized number on the inflation, and that's really going to scare markets into this idea that perhaps the Fed may need to pause. Okay, so I think that is kind of the thing I'm looking for. If we were to get something today like a 0.4 number, I think that'll get a few eyebrows raised, and that will create a little bit of concern. It will, of course, also be the highest month-over-month print over the last almost 2 years. Okay, so 0.4 to the upside, I think there's something there to be aware of, to be switched on, and then, of course, any negative prints. All right, does that do anything? Well, it definitely confirms a November cut from the Fed. It perhaps opens the door. Perhaps the Fed could even cut more than 25 and get back to neutral a little bit quicker. Okay, That said, PCE is secondary today. It is the data print we get at the end of the month. We, of course, did have the CPI data come out a little bit higher than expected earlier this month. So, again, hence why this data is perhaps a little bit stale. But that said, most important, tomorrow's non-farm payrolls. And then guess what? We've got an election next week. And that's all the market's fixated on right now. You've got to factor that in, particularly into your analysis today, because what it does mean is that, sure, we could be sitting here and you could be trying to take these trades and trying to really make a day of it. But in reality, the markets aren't going to move much now because they're going to wait for that election outcome. Okay, so that's it. Don't forget, if you haven't yet signed up for that election rundown, make sure you sign up for that election rundown. We're going to talk all about elections. We're going to go over Trump versus Harris, talk about the different scenarios, and most importantly, talk about what comes next, depending on who ultimately wins on the night. Okay, that's it for today. If there are any questions, do post them in the channels. Otherwise, good luck out there. Always manage that risk and go make some money.